Just waiting for YouTube to pick up the stream, and then we're going to get started. All right. All right. All right. Sorry about that. So, welcome to day 4. Today, we're going to be covering the second part of actionable signals as far as what we look for. And none of this stuff is going to be new as far as reversals go, but there is certain things we look for to increase the odds of a trade working out. So, we're going to get to that, and then after that, we will do some review just to go through some charts, point some things out, take any questions that there are about the signals. And then next week, we're going to talk a lot more about analysis using multiple time frames and everything we've already learned, as well as the third universal truth, the broadening formations, and multiple time frame analysis is going to be really the main focus as we get into the second week of the boot camp. So without further ado, let's get started. So the first one here is the 3-2-2, and we want to know what it is, and then we're going to see some examples. So a 3-2-2 is an outside bar, which is a 3, followed by a 2-2 reversal. We specifically look for 3-2-2s because they're going to have a larger magnitude due to the 3. And given that we have a 3, we also know we're trading back through a broadening formation. And this is the best way to scan for broadening formations. And we've already covered that the broadening formation is a higher high and lower low to the previous range. As you can see, the outside bar is a broadening formation. We're going to talk a lot more about broadening formations, how we identify them, and the ins and outs of how those work with our signals. But what you want to know is that when you have a broadening formation or a 3, if price fails and goes back into that 3, it's attempting to take the other side. So when we see the 2 down in green setting up the 2-2 reversal back into a 3, we can expect we're going to go and become an outside bar to the outside bar. And what we like to say is if they did it one time, they may do it again because the broadening formation is a series. It occurs over and over and over. So we scan for the 2 down in green into a 3, and then we look to trade the reversal, 2-2 to the upside. And then the same thing on the downside, the 3, and then 2-2 reversal. And the color of the 3 is not so much important. The 2-2 will tell you which direction it's going and if it's going reversal down or reversal up. And now for some examples. So Netflix on the monthly, you're going to see here the 3, then the 2 down in green right there. When it goes green, we know what they're trying to do, right? 2 going 3 to there, ran out of time, sets up the 2-2 here, and then up they go. And you can see this trade lasted 1, 2, 3, 4, 5 months at the time when we screenshotted this. And I believe there might have been a reversal right after that from the shooter. If we go to ARC on the yearly, so if you had seen the big growth crash of 2022 with Kathy Woods, it was a 3-2-2 on the year, and they got killed. You can see it's kind of a shooter, not quite, but it is the failed 2, and then boom, takes them all out. So you can see how the magnitude's very big, because on a yearly chart, I believe this is like an $80 move. And then SPY, just to show you it happens at all time frames, here's a 60-minute. I believe this was a Fed day or a news day. Yeah, so I believe it was a Fed day here at 2:30 p.m. So the Fed comes out, they make the 3, and then they go 2 down hammer, and then boom, 2-2 back through the 3 right there. And you can see they take off. And then when Netflix did the 3-2-2, it simultaneously occurred with Amazon. Notice the 3, 2, 2, and then boom, off they go. 1, 2, 3, 4, 5, 6 months of upside. And whenever we see something like this and it has not reversed against, we'd consider that still good because that reversal and that rejection from the bottom of this 3 is still occurring until that gets 2 to the downside. So hopefully you guys understand the 3-2-2s. They're one of the best setups. A lot of people trade just those, or at least they look for the 3s. The next one's the 3-1-2. So very similar to the 2-1-2, except we're playing with 3s, the broadening formation. So there's reversals and continuations here, and then we'll explain and look at some examples. So the 3-1-2 reversal, similar to the 2-1-2, we want to know the color of the 3. Because if this is a 3 green, that's 3 to the upside. Because it was going lower, now it reversed and it's going up. And then the 1. And then you get the 2 countering the 3 to the downside. That's a 3-1-2 reversal to the downside. You can see the trigger, same as an inside bar break, low of the 1. And we're using that to take this out. The magnitude is the other side of that 3. And then similarly to the upside, you get the 3 in one direction to the downside, the 1. And then the 1, 2 up reversal, 3-1-2 to the upside, same magnitude, the other side of the 3. So you're going to see it's a broadening formation. Then they go inside in green, so they're coming back into the broadening formation, but it's a scenario 1. We don't want to trade that. And then when it goes 2 here, that's where we want to get in and get involved. We also can have continuations. So notice we get the 3 to the upside, the 1, and then the 2 to the upside, confirming the direction of that 3. And just like a 2-1-2 continuation, your odds are definitely slightly less, but we still have a magnitude if that's enforced. So that's still something we look for, especially if we have a hammer like this. And you'll see the 2 is confirming the color of the 3, which makes it that continuation. Then in this case, the 3 down, the 1, consolidation, and then the boom. 1, 2 to the downside. Trigger and magnitude, just like the reversal, except it's a continuation. And that's relevant because we want to know what the condition is at any point in time. Because even if you know what a 3-1 is, if you don't know what the condition is, if this is reversal here and this is continuation, you don't know the odds of that trade actually working out. So when we have a reversal, we know we're back through a previous range and there's shorts to trade against if it's this 3-1-2 to the upside. And then vice versa. If it's a 3-1-2 to the downside, we know we're trading against guys who are long. So we have someone to stop out. In this case, what this 1 shows us is maybe trap shorts, we don't know. As we described yesterday with the hammers and shooters, we don't know for sure if someone's trapped short in here or if this was just short-term profit taking. And then it confirms. So we're not trading against people in losing positions, but we're confirming what has already occurred. So the 3-1-2 is also referred to as a Chicago, and it's an expansion or a 3. And the reason the 3 is an expansion is because it took out both sides. The range just got bigger, made a new low and a new high. So we can consider that an expansion of price. Followed by a contraction or a consolidation, which is a 1. So you have expansion going outside the range, and then a contraction going inside that range. And then it's followed by a directional move. And what this setup shows us is aggressive participants. And the reason we can say that is because when you have a 3, it shows aggression. It tells you buyers stepped up, tried to get it up there, and then they were countered by a more aggressive seller here. So they're willing to buy up and sell it down. So this is showing you aggressive participation from both the buyers and the sellers. At this point, the sellers are winning, is what we can say. And then same thing here. If we go to any of these, what this shows us is they're willing to sell down and buy up. So the sellers and buyers, they're very aggressive in here. So the 1, and this is what happens. So it shows the aggressive participation. And the outside bar, it tells us there was a rejection, which we already covered. And then the 1 tells you that those aggressive participants did not come back the next day, or whatever candle it is. They didn't come back afterwards because it went inside. If it was aggressive, it would become a 2, but it did not. And then what the 2 tells us is that they came back, and they normally bring back up. And what I mean by that is this setup is very similar to a tug of war. And the 3 is the tug of war. They tried one side, then failed, took the other side. The 1 gives the participants in there time to gather some friends. And then the 2 shows who won that. So you can see it's like they tried it up, they tried it down, and then they go inside, and then boom, the sellers win. And then same thing with the reversals. They tried it up, they tried it down, they go inside, and now the buyers come back and actually counter the sellers. So we have a big loser here. So hopefully you guys can see that, and hopefully that analogy really sends it home. We can also use that analogy when talking about rev strats, where they tried to take it up with the inside bar, and then they're getting countered by a more aggressive group. What this is showing is similar to that, except we see the aggression, and then we trade whichever direction that 2 goes. So for some examples, we had a big energy trade near the beginning of 2024 in January. You'll see COP here was a good example of that, where you get the 3. They buy up, and then they sell down, and then you can see the buyers try and come back again. And then it goes 1. So notice, they're really aggressive in here, and then they're gone, doing nothing. And then right here. When that becomes a 2 to the upside, we know the buyers are winning. And the guys short in here, they're really screwed. So boom, up they go, and then they confirm that. Then you can see negates, then 2 to reversal. This was last month. If we go to Shell on the monthly, since the energies were all doing that, we're going to see that scenario occur across all the energy names. So you'll see the 3, the 1, and then the 2. And Shell is it's one of the oil, I don't know which oil ETF they're in, but one of the oil names, as well as COP, Conco. If we go to Tesla on the daily, we noticed in yesterday's actionable signal list, we're looking at the 2-2s and all that stuff. Tesla had the 2-2 week. To trigger that 2-2 week, we had the 3-1-2 reversal right here. And that triggered the weekend force. And you can see they puke all week. And this occurred on a Monday. So really got killed in there. So hopefully everyone's following. We also then have a 3-2. So similar, except we do not have a 1. And you can either have a 3-2 reversal or you can have a continuation. And we're going to explain those two. So you'll see here, they sold down, they buyed up. And then the next day, the sellers, when this gets taken out here, now all these buyers are really in trouble. Before it does that, it's a 1. So do nothing, it takes us out. Now it's a 3-2 reversal because it was going up, now it's going down. And then vice versa on the upside. They go buy up, they sell down, they become a 3. And then the next day or the next candle that opens, countered by those buyers because you can see they bought up, they sold down, the buyers came back and they win when they go 2 above this. All these shorts, big problems. 3-2 reversal. So really simple. Hopefully you guys are following. So these commonly occur on 60 and daily charts due to overnight gaps. There's also instances where you're going to see it occur during periods of really high volatility because of it's a 3, right? So high volatility. And that happens when you get a vigorous change in continuity on higher time frames, most often than not. So like if you're going to have a 3-2 month or a 3-2 reversal week or any of that type of stuff, it's because you have like a really aggressive group and then the next one becomes that 2 when that continuity changes the next week or the next month or whatever time frame it is. So given that it has no magnitude, it must be taken with the knowledge of a higher time frame magnitude. And this setup should go instantly. And the reason it should is because what this shows us is they were willing to sell down. They were really aggressively selling because they countered a 2. So it failed and then boom. So when this breaks, we have zero reason to believe those sellers weren't participating there, right? Like we know for a fact they were selling in there. And since it's a 3, since it's a broadening formation, if you're ever entering at the high or the low of a broadening formation, you're looking for it to expand because they new high, new low. And then new high here, you're looking for that range to get bigger. That's why there's no magnitude. So when you take a trigger like this, our stop really shouldn't be more than like the spread plus maybe 5 or 10 cents at most. You should have extremely tight stops on 3-2s, both the reversal and the continuation. And when we say they should go instantly, they should. And I'm going to show you an example of that once we get down there. So we can also have a continuation. So you have a 3, and then a 2 to the downside, confirming the direction of that 3. Similarly, it should just go instantly. At worst, we'd be putting our stops at the high of this, just to give you some reference there. And at best, we'd use the spread plus a couple pennies above that. So very small risk. And then same thing on the 3-2 continuation to the upside. They sold down, they bought up, and then they continued that. And they're expanding the range, confirming that. When it goes 2 to the upside, continuation. So Stan has a question. He says, do you always wait for the triggering or do you look in lower time frame in anticipation of triggering the higher time frame? So just because I do not want to jump ahead, we won't talk too much about that, but yes, that is one thing we do. Because let's say this was a monthly chart, we can go on the daily chart and use the daily participants to trigger the monthly participants, if that makes sense. So instead of buying the new high, we can add on the new high and risk their money instead of ours. But we will get to that later parts in this course. So similar to this reversal or the 3-2 reversal, this is an expansion of the range. Thus, it has no magnitude. This is a play on the continuation of aggressive selling or buying. And I just missed that there. We commonly see these occur on the 5, the 15, 30, and 60 of gapping stocks intraday. as well as across the other four major time frames. Given they have no magnitude, we need to take this with the knowledge of a higher time frame magnitude, and these should go instantly as well. So for example, the gapping stock here, CGC on the 5 minute, you'll see they go outside bar the first 5 minute of the day. And this was something we definitely traded. If we go back to March 26th, which if you're a premium member, you can do that in the playlist. You can go back and look. We were trading these this morning. So they go 3, which tells us what? They tried to sell it down, and then the buyer showed up, aggressive buyer. When that goes 3-2, we'll zoom in here. Notice right here, we take the offer and our stop is that. So we're risking a penny and it goes instantly, boom. And you'll see in this scenario, what was the higher time for magnitude? To become an outside day, because we took out yesterday's lows, failed, then 3-2, looking for yesterday's highs, because we know 2s go 3 on the daily and every other time frame. So really good example of that. Another example, this actually occurred last week. It was Marvel on the 31st. We had earnings right here. So like we said, with high volatility, you can get these on the higher time frames as well. So they sell down, they buy up. The earnings come out, they open flat. And this is something super important for the gappers, which we'll throw in here. When an earnings opens flat, the move comes at the open more often than not. Rarely does an earnings happen, it open flat and then goes inside day. Very rarely. More often than not, it will become a 2. So in this case, they open, become a 2 down, and win instantly. Boom, killed. Because that's the expansion of a 3. The range is getting bigger by definition. So we can expect things like that. We did not get the trigger of the daily here. We used the lower time frames to confirm the daily and made a couple bucks on the downside. The pivot machine gun. This is an awesome one. There's memes all about it on Twitter. If you've ever seen the Strat hashtag, a lot of people post about this stuff, or at least they used to more so. But the pivot machine gun, let's get into it. So first of all, what is it? The definition of that, why it occurs, and then some examples. Yeah, we also have an emoji in the Discord for that, the Kermit. So the PMG, also known as the pivot machine gun. What you're going to notice is we have multiple lower highs or multiple higher lows in a row. So the common rule that we use is 5 or more lower highs or higher lows in succession, back to back. And this is when identifying any potential pivot machine gun play. So you'll see here, lower high, lower high, lower high, lower high, lower high. That's 5 of them. And then when this breaks here, that condition has now changed. Whoever was short before, they have to start getting out. And that's why we see such a big move. And then vice versa to the downside. Higher low, higher low, higher low, higher low, higher low, and then boom, everyone gets killed. So why does this happen? When we're identifying the PMG, we're looking to trade back through a previous range of clustered pivots that are close together. So when we look for this setup, we prefer 5 or more candles in succession, higher lows or lower highs. And both of these setups, up or down, work for the same reasons. So for example, in a bearish pivot machine gun, the reason it occurs is because price has been dropping for multiple bars in a row. Anyone short has placed their stops at the obvious pivots or where they entered. So once a reversal occurs, a long buyer has entered the market. As they take the offer, each pivot that's taken out will remove liquidity from them due to the short traders buying to close their positions. Therefore, we machine gun, where one pivot triggers the next, and so on. So just to give you some graphics here. Anyone getting short in this, their stops, they're putting them at these highs or where they got in, or they're trailing it down to this high. So we look to trigger that first one, telling us they went inside bar here, right? And then when it goes 2, what do we know? Well, an aggressive buyer stepped up because the equilibrium broke to the upside. It's the only way that can happen. Someone's taking the offer. So when that occurs, anyone short has to buy to close in the direction of our trade. So we have simultaneously all the short guys buying and this aggressive buyer who might have to fill 1 million shares, could be 10 million, could be 100 million. We don't know. But what we can know is that we can expect it to go. And if it really should just go right away. So you can see the first will trigger the next, will trigger the next, trigger the next, and so on. And if you look on a lower time frame, what you'll normally see is they'll trade up, take the pivot out, go sideways a tiny bit, and then boom, right into the next pivot, sideways a tiny bit, and then right into the next. When they're really aggressive, they just blow through all of them without a single 2 down candle on like a 5 minute. It's really cool to see. So for example, this is CVX on the daily in the energy sector. The whole energy sector did this in April. So you're going to see the higher lows in succession. Notice how they're very close together. So it's going up, it's going up, it's going up. Then boom, 2-2 reversal right here. When that occurs, the sellers enter the market. Price is now going down. It's making lower lows. And we know these guys are long. So they're going to have to start selling in the direction of that trade. And then boom. Notice you erase 5, 6, 7 days worth of gains in one day. And the reason it happens is because everyone that was just buying becomes a seller right there. Everyone. So you can expect this day to move a lot bigger than whatever was happening before. And this was a really crazy one we had in August of 23. You see DXCM on the month. What we can notice is the shooter month actionable signal. So we can look for that. And then you get the 2-2 pivot machine gun. You can see it takes a little bit actually on the daily chart. It takes a little bit to get down here. And then once they take this one out, they just take them all out. The first triggers the next, and so on. And we'll actually pull this up towards the end of these examples here, and I'll show you on the daily chart how that works. This is MRK monthly going into the end of 2023. What you'll notice is 1, 2, 3, 4, 5, 6 lower highs. They make a new low to this and then come back in. Inside bar actionable signal for the 2-1-2 reversal against the losing traders here. Pivot machine gun tells us we can look to take them all out. And the first month didn't quite go. The second month becomes a 2 to the upside, which confirms that previous month, right? Like we've already talked about. You're either going to confirm or negate everything that happens. So they confirm it, which means it's still happening. That inside bar break is still occurring. When that goes 2, and then boom, they take them all out. And then I believe this is the last one we will be covering today. It is the kicking pattern. And if you were on the stream this morning, we talked about these, and we'll actually go through some examples from today. So the kicking pattern, and we'll explain it and give you a few examples here, and then we'll go to the charts after we get through questions. So the kicking pattern. What we look for is a large directional bar in one direction, and then a gap in the opposite direction. So when a kicking pattern occurs, we prefer to see this gap. We don't need it though. There's 2 variations. So once we get to the next slide, you'll see that. But we look for the gap, and thus it's on the gapper list. Elaine posts that every day. Below the open of this bar here, that is a 2-2 reversal and a kicking pattern in force. So like we introduced at the beginning of this, and I don't know if we've said it very often since we're kind of looking back on charts, but below that, when we say in force, what that means is that's occurring. So the kicking pattern is occurring or in force below the open here. And below that, that's when we get short. What we're looking for ideally when entering these, which we'll talk more about once we get to the end of this course and talk about trade plans and whatnot, we're looking for it to go slightly up, flip red, and then short it with a stop at the high or lower time frames. But you'll see here, kicking pattern to the upside as well. We want to see a nice directional bar to the downside, and the rule is about 80% of that candle needs to be one color. So you can see it's 80% red, and then it gaps in one direction, other direction I mean, and above that open of that next bar, it is in force, and that is then occurring. We also have a variation of this. So you're going to see it's a 2-2 reversal. On a lower time frame, this is gapping because it closed here and then opened here. So we play these as a 2-2 reversal. It's just a less aggressive form of a kicking pattern. So we call it a kicking variation because it's still the same concept. And what is that concept? So as we've seen, a kicking pattern is a gap and a reversal. The kicking variation is a lower time frame gap and a reversal. When we identify this pattern, like we said already, the candlestick needs to be 80% or more of one color. Ideally, we want those very small wicks. And for example, for a bullish kicking pattern, the thought is that if price went out on the lows, we'll get to that shortly, but if price went out on the lows, then the shorts get to stay short. So if we scroll back up here, when price closes down here, anyone that's been short gets to stay short. So there's nothing they had to do. They had a nice green position if they shorted that day. And then simultaneously, any long buyers have been sidelined because price is going lower, so they can't buy. It's going down. So when you look at this, price is going down. If you're a buyer, you're stopped out, or you're in a deep loss. So no one in here is a profitable buyer. So when the gap occurs, any shorts who stayed short are placed at an immediate loss and must buy to close. So when we go and take a look, when this gap occurs, if you shorted during this candle here, at an immediate loss when this happens, because if you shorted in there, it's trading above that for sure. So every single participant that traded during this candle has to buy to close to protect themselves from further loss. And they have to do it right then and there. So that occurs and they must buy to close. The sideline long buyers who couldn't buy before because the price was going down can now buy because price is now going to the upside. Therefore, the buyers are taking the offer and the shorts are also taking that offer and buying to close their positions, which removes liquidity and causes price to speed up. And this is the same concept for the bearish kicking pattern, just the opposite. So when we say it removes liquidity, what we mean is the sellers are now buyers because they have to be. And it's going two up, so the buyers are also buyers. So every single person here going in there and buying that day or whatever candle that is. So hopefully that makes sense. And we had a question, the magnitude of a kicking pattern. It's going to be the same way we always gauge our magnitude. The thing about the kicking pattern is we're also using all the other time frames because not only do we want to put the guys who are short here at an immediate loss, but we want to check and say, did we change the weekly continuity? Because now the weekly guys have to buy to close. And did we change the month? Because now the monthly guys have to buy to close. And that's where you get the really crazy moves where you take the weekly continuity red to green and then the month red to green and then the quarter, and then everyone gets really, really upset if they were short. So the magnitude is the same as any other reversal pattern that we've talked about. We still gauge magnitude the same way. So for example, here's Marvel on the daily. So you can see the daily magnitude. So take this out. When that occurred, I believe the weekly open was here. So they take the daily magnitude, negate the week. Now anyone buying this week has to get out when that's below that. And you can see the weekly guys now have to start selling as well. And when it comes to kicking patterns, it's one of the most aggressive reversals you can have because we definitely know if you bought yesterday and you stayed long, which you did because it closed up at the highs, you're definitely at an immediate loss. And we know that for certain. So when this is red, we're short for certain. We have to be. And if you were long yesterday or maybe you were swinging into this, when that happens, you flip your whole position you were long short and maybe you add to it because you know for certain whatever you're doing before is no longer working. So even if you got trapped into the previous day candle, make all your money back on this day. We got another example here. This is IP on the daily. You'll notice it's a variation. And this occurred on a Tuesday, I believe. So, actually, I take that back. I'm not 110% sure, so I don't know. But they did go two down. Notice they close at the lows, they open at the highs. So about 95% of that candle's red. So the shorts yesterday definitely stayed short. Then when we trade above this, we simultaneously have this kicking pattern. It's a variation. And pivot machine gun. So if you're short here or before, and your stops are at this, and this, we take the first one, triggers all of them. Boom. And you can see they move much bigger in the opposite direction. And that covers what we're talking about with the actionable signals. There is no other signals. That is every reversal and continuation that can occur in the market. The only one that we didn't specifically point out as a pattern of continuation is the two up continuation or the two down continuation. But I believe that should be self-evident. So now we can take your questions and let's see. So the first one, even though futures trade different, you could still play ES NASDAQ off of SPY and Q's kicking patterns. Yes. So personally, I don't trade futures so much. I do have a little funded account that I'm messing with, but normally I'm trading the SPY and the Q's, IWM, Dow Jones, that stuff. So if you're going to be a futures trader, or if I was going to be a futures trader, I would use the SPY and Q's and that stuff to do my analysis and just play off of the futures. Simply because we have way more information trading the indexes with all the sector ETFs and stuff than we do just looking at one future or all four futures. So can a kicker be a two down in green or a two down? Or does it have to be a reversal? So are you saying like if this was a two up in red and then it gapped and took the high out, would that still be a kicker? Is that your question? And correct. Yeah. So if it was a two up in red and then they like gapped and went two up again, it's not a reversal, but the same type of logic can apply where potentially those guys from the previous day that was two up in red stayed short if it closed out at the lows. So if it were to gap and go two up and then take it out, yeah, you could consider that a kicker, but it's not specifically what we look for. When we look at something like Marvel, this is what we're specifically looking for. We ideally want it to be towards the top of a trend or at the bottom of a trend, simply because this was going up for 6 days. And then once this kicker occurs, those guys who it's been going up for 6 days, you got 6 days worth of guys who've been buying right here. All 6 days worth of those guys are now questioning their buy. So it changes the perception of what everyone else was already doing. If it's a two gap up and then it's red, anyone that was long before can stay long. So unlike this big two down in red where you're going to stop out anyone that's been long below these guys, if this was gap up in red, you didn't stop those guys out. So the condition is a little bit different. What we would still identify is just those shorts can still be trapped. We just don't know if the long buyers are all going to step in at the same time. Whereas when it goes like this and then like this, anyone that was long before, they weren't, right? They're all stopped out. Now they can all get long at the same time. So this is, I don't know if it's a question or not. So there seems to be a lot of bastardizations versions of the Strat. Wow, English. Of the Strat out there. I know Rob said you customize it to your style of trading, but I watched a YouTube video from another stratter about entering trades when the price triggers, when it triggers the entry. I remember Rob saying you always enter after a TTO, not just because price has triggered. I remember this because I was always impatient and never wait and would pay the price. But this wasn't mentioned in that video. So when it comes to the strat, yes, it personalizes itself to you. For the specific conditions we're looking at right here, the actionable signals, they're actionable signals. Like it means like take the offer or slam the bid. So some people like, or some trading rooms, they'll be like, all right, everybody, like we're going to go in here and we're going to buy right now because it touched a support or something. And that's their signal. Our signal is given to us by the charts. So when you see an actionable signal, especially a kicker, like you're in there right when you can be. As far as waiting for things to trigger, if it's like a monthly signal or weekly signal, you don't have to be the first one in because those higher time frames, similar to like NVAX, like it moved like 40% earlier in the week. When that occurred, we did not have to buy it on Monday to be part of that move. So you don't have to be that first one in, but you can be, right? You can try that. Once we get to position management and the different setups and trade plans and whatnot, we'll talk a lot more about things like that, especially once you guys start actually trading and doing this stuff and you have all your other questions of execution. So I hope that answers your question or at least addresses that. Yeah. So, and I guess let me just add on to that. These signals, we want to do it in succession because we like a pool player that's really good where they do take one shot and then set up the next one and then the next one and the next one. We want to take like the 2-2 rev strat day to trigger the 3-2 expansion week into full time from continuity on the month. Like we want to do stuff like that because then we can use the rev strat and then add to it. So once we get more into the actual execution and what we're looking for on all the charts, not just one chart or one pattern, it'll make a lot more sense. So, how should we apply an engulfing versus non-engulfing outside bar setup, the 3-1-2 and 3-2 setups? So, for 3-2 continuations, the engulfing patterns are going to have a higher success rate. And I'm actually very glad you asked that question. So, we'll scroll back up. So his question is pertaining to the different types of threes you can have. Because you can have a three like this, except it's a doji and it closes in here. So when that happens, what we'd say is they were aggressive. They were willing to buy up and sell down, but one side wasn't like clearly winning in there, if that makes sense, because they tried it up, they tried it down, and then they closed in the middle, doing nothing. So when that occurs, we would just say you have a lower success rate of actually taking the continuation if that occurs. Because if this is bright green or bright red, we have reason to believe that that can continue. If it's a doji, then we're not so certain how aggressive those guys are, unless you have higher time frame continuity to go and look at. But for specifically like one bar or one time frame strat setups, we want to see this ideally. And as far as like all of these signals, there's gonna be different types of like looks. Like some of them, like you're not always gonna have this perfect 3 and then this 2 down that opens here and then goes here. Sometimes it'll open right up at the highs and then go inside bar, go 2 down, and then it closes. The importance here is we want to know when that goes in force and that triggers. We want it to happen as soon as we can. We don't want this to open on a 60-minute and then it takes 45 minutes to trade down there, giving all these guys who are long 45 minutes to get out of that. And then it takes the low and does nothing for 15 minutes, and then the 60 closes. What we want is like 60 minutes up, the new 60 opens, and then 10 minutes into that 60, we take this out, and now those guys are really screwed because they didn't even have a chance to get out, if that makes sense. So once we get to the charts, you'll start to see the differences in where we want these nice long green and red bars, so they're aggressive. We don't want to see like doji, doji, doji. Yeah. And doji just means a candle that's like all wick and then very small body right in the middle of it. That's what we'd call a doji. Similar to a hammer, except think of a hammer with a big wick on the top of it. So on the Marvel Daily chart, continuity is to the upside. No, it wasn't. Because the day and 60 are 2 of the 4 time frames. Super important. A lot of people mess it up with the strat. They don't realize that half of the continuity resets every day, and every 60 minutes, a fourth of it resets. So when that Marvel occurred, when it was red, there was no continuity at all. The day and 60 were in control, countering the week and the month. Yeah. So, sorry, I don't mean to like yell at you, but it's super important because most people, what they'll do is they'll say like, oh, the week and the month is green, and then the day and 60 are just clobbering those guys, and they don't realize that half of the time frames are countering right then and there. So, what I do want to do is go through some charts specifically from today, because this morning we talked and we actually gave a little spiel on kicking patterns, and thus, let me see. And yeah, and thus we had a lot of kicking patterns in the morning, so I can actually pull up the stock list we were looking at in the morning and go for it. So you can see this morning, we're identifying pre-market. Where are all the kicking patterns? Because they occur on the gappers, whenever you're in the morning stream, once we get there and you guys are trading, what you're going to see is we'll have the gappers up, and then we'll have specific sectors with actionable daily signals each day, or we'll have specific things like if let's say we have simultaneous breaks on the month and the energies, we'll always have those up like all month or something like that. So in the morning, we're identifying the kickers. And what we identified was gold. And I'm going to blow this up for you. So gold. What had happened was this. So we can identify the broadening formation. We haven't quite gotten to that yet, but once we get there, we'll talk more about it. So you'll see we get a 2 to the upside yesterday. Can we say this is like a great kicking pattern? It's not the best because we would have preferred a much greener bar, but we can still say they bought yesterday, right? It was mostly green. And then we gap down. The other thing we can see here is, notice we had this candle here. So we're actually taking 2 days worth of participants underwater right at the open. So these guys, they're drowning unless they close. So right when this open occurs, if that is red, that is in force below 215.07 and thus going lower. As far as your magnitude, you'll notice we've already taken out the 2-2-day magnitude. If we go to the week, at this point, you'll see the week, it was already a 3. And you're not going to see that in this time frame, but it was already a 3. In the earlier part of the week, it went down, then it went up, and then it's a 3 still, right? So when it came back into the previous week's highs again, they're trying to come and take out previous week's lows again, or the lows of the week. So we can identify this here. You will see Monday, they go inside. Tuesday, they go 2 down, 3-1-2. And you'll see that is a continuation, right? So once it makes the new lows, we don't know if it's going to continue because it's a continuation. The sellers could be done selling, and they were. Comes back in. Then you get the 1-2-2 to the upside. Where's the magnitude of that? To take this out. And then you'll see they also take out last week's highs, which were trading, I want to say they're trading right here. This is last week's highs. So these 3 bars, compound 3 to all of this stuff. Then the 2-2 here, when that occurs, this is our compound 3. So where's the broadening formation? On a 3-day chart, this is your 3. So we're looking to do what? Kicking pattern in force to take that out. And you'll see then the try expands. The range gets bigger. And I don't know if we can actually pull this up on a 3-day chart. Sometimes it'll show it, sometimes it won't. Yeah, so in this case, it does not show it. What it does show is this. You'll see they went 3 and then 2 up in red, which was occurring on the gap, and then 3 again to take that out. So we're gauging our magnitude using the broadening formation, using the 3s. If we go to silver, yeah, we'll get to upstart. If you go to silver, really good kicking pattern, right? Wasn't going into all-time highs or anything like that, or into these highs. But we did stop out anyone that was short in here, at least a good chunk of them. Gap down right here, where's it going to go? The 2-2 reversal day magnitude to take these guys out, 26.9 and this. So as far as how you take advantage of that, we pointed out in the morning, the Strat 5er. Notice the 1, 2 up, shooter actionable signal. Do we wait for it to take it and then let it bounce around and then we take it? No. We hit it right there, 27.1. Then they go into the target, and you'd have to take your profit when that goes 2-2 against or into the target. Because once it's down there, did not stay down there. So you'll see they did come back up. They stopped out. Who was short here? The daily continuity never got rejected or never got negated. So at that point, the kicking pattern still in force on the day. So if we go to the higher time frames, you'll see on the 30, the 1, 2 up, 2 down Strat 30. Where's that trying to go? The other side of this mother bar. So they poke up, then they poke down. Boom. Hits low day to the penny. Then they grind around a little bit, and you'll see the 2 up, 1, 2 down reversal, and then the 2, 1, 2 continuation. If we go to the miners of silver and gold, you can go to JNUG. I got really killed today. So this was specifically what I really liked. Because it's a Strat, what does that tell us? These aggressive buyers are getting countered by more aggressive sellers, and it's a kicking pattern. So you have simultaneously the kicking pattern and the 1-2-2 Strat. So below 41.7 and below this daily open, you are in force kicking pattern and in force Strat. Where's it going? Down there. And all these guys, they're going to have to get out. So in the morning, on the 5-minute, there was an inside bar fiver. That was the first signal in here. And they did come back, stopping out. If we go to the 30, you'll see the 2, 1, 2 measured move. So like we said with the measured move, normally there either is magnitude or isn't magnitude or very, very little magnitude. So you're going to see very little magnitude. Why can we do that? Because the daily kicking pattern's in force. We have all day to short that thing because yesterday's guys are still getting out. So this confirms what we know, and it's a measured move. So how do we measure it? The high of this to the low of that. We're looking for about another $1.82. And into the close, they go $1.93. So even more than we expected. If you go to GDX, you'll see the same thing. And it's similarly, it's a minor. or minor stock, minor of gold. And we didn't even get to the weekly chart yet, which I'll show you guys in both of these. But you'll see, here's your daily broadening formation like so. These 3 bars went outside of that stuff. And then here's your kicking pattern right here. Anytime it's below 3474, it's a rev strat plus kicking pattern. The magnitude is this to take these guys out. So right there, when it goes green to red, if we can short it with the stop at the highs, that's ideal. Rob would also always say, go in there and use the 1 minute or use any lower time frame you can, because you can manage your risk a little easier if you're not willing to enter right at the first, you can see 1 minute of the day. And we'll show you on an upstart how we can also do that. But you'll see the inside one are down, inside one are down, and then they go down and they keep puking. And similarly to JNUG, inside, boom, measured move, confirming the kicking pattern. So you measure it out. They sold about 73 cents, so we're looking similar to that. They go, what, 62 cents, so just a little less. JNUG is way better. So now let's go and take a look at the weekly charts. Why might we expect aggressive downside action? Well, the weekly time frame is a 3, 1, 2 continuation, and it's actually coming back through a pivot machine gun. So notice how we're going to use all of the signals, all the information we know, and all the time frames. Because we can use the weekly guys, 312 down, to confirm our trade. We can also use the fact that it's a pivot machine gun to gauge how far that's trying to go. They're trying to take all these guys out. And then the daily guys confirm that, negating the week to red, putting it back in force, rev strat on the day. And then the 30 guys give you the signal to confirm all that. So hopefully you guys can see how that works across all time frames. You are not going to get really big moves unless you're confirming across all time frames. And that's what most people miss. They want to go in there, they want to be a scalper, and just look at the 5 minute. That's not how it works. If we go to Upstart, this is an example of right off the rip. And this is what we're looking at the open right here. On the stream, we said right here, get short. So you'll see they go slightly green, and then they flip red below the daily continuity. They go 2 down right there. That's where we wanted to hit it. Ideally, we would have liked to take the green to red move, short it here with the stop at the highs. But with the 2 down continuation, it's still confirming what we know. It's still negating the day. They tried to buy it at the open. It goes 2 down. Those guys are kind of screwed. And then right into the daily magnitude. So in this case, you'll see, how do we gauge our magnitude? The 2 up, 2 down reversal, it's going there. 2, 4, 4, 2. Then it does. And ideally, what we wanted to see was the outside week, because simultaneously, kicking pattern plus the week went green to red after weekly magnitude. So hopefully you can see the weekly also matters, plus the daily, plus all those lower time frames. And later in the day, you'll see they go 33 or 2, 1, 2 reversal. There was also an inside 60, 2, 1, 2 reversal. And then notice this, the 1, 2, 2 rev strat right here. So the sellers came back, renegated the day to red, putting the kicking pattern back in force with a rev strat, similar to gold, except on the 60 chart. So you could have came in here, sold it in the morning, and then came back in the afternoon, took the rev strat again, and made even more. So great examples of that. There were some failures today, and we didn't really spend much time looking at these. We were mostly looking at Upstart and then mentions of the gold and the GDX and the JNUG. But if we go to Tech and FCX, this is an example of just didn't work. Similarly, had the rev strat. Notice they barely spent any time below the daily open, and we want these to go instantly. So if we mark it out, you'll see the day opens down in here, 4-9-14. So the green to red move, if you're trying it in the morning, it stops you out. There's just nothing you can do. And after that happens, then we're waiting for additional signals. The 5 minute, there is no signal in here. There's a green to red move, but after the first minute or a couple minutes of the day, we're not doing that. We're looking for signals. So they go 2 down, 2 up, and there was no sellers. They just didn't come in the morning. And you'll see then they go do what? And this is when gaps don't work, this is what they do. So it's so important to see this. They do go 2 down, 2 up on the 60, and then they fall back in and then get stuck, chop shop. Sorry if I'm going fast. I'll slow her down. Yep. No, everyone learns at a different speed. I understand. In the replay mode on YouTube, or when you watch it, you can slow it down in the once it's posted. So if need be, you can do that. But we'll see. Tech did that, and the importance of that is if it's a losing trade, we'll get to stops and stuff, but we do not stick around. And we actually didn't talk about tech at all this morning. We were mostly on the gold stuff because we had so much information there. But FCX, you'll see here, similarly, they did grind down a little bit. If we go to the day, had the 122 day. If we hit the higher time frames, could have been a 2-2 month, but it did not. On the week, it was in force. So the fact that the week was in force, 3-1-2 to the downside, that's why I was on the list, because the weekly is being confirmed by the day. Simply, the sellers just weren't that aggressive today. Didn't do much. In the morning, if we're a 1er guy, you'd see they first go green, and then 2-2 1er, that's where you could get short. And then if it comes back in on you, we'd be break-even stops, or ideally take some of it off once it starts coming back in here off the double inside. But if we ever get something like this where it works, we never let it go red. Never. Because you can't let winners go red. That's how you lose. And then you'll see they get completely stuck in that morning range. So nothing after that. And by stuck, I mean you'll see on a higher time frame, all of this is mother bar. As we had talked about before with the inside bars, this is all a 1 because they failed to make the new highs and failed to make the new lows. So they're stuck. Yep. Upstart was beautiful. Now the SPY. I did mention I'd like to see some of you guys chart out the SPY for us. This is something we also mentioned at the open. So the first 5 minutes of the day, 2 to the downside. The 5 minute and the day are coupled, right? Because similar to how the day and the week and the month get coupled together and then decouple, giving us additional information, same thing happens on the 5 minute, which is why during the beginning of the day, if we go in there on a kicking pattern and it doesn't work right away, what it tells you is the daily group is not that aggressive because they didn't go in right away. And SPY here, the first 5 minute, this is the daily group. So they're aggressively sold it down, right? And then they formed the 1. And while this is occurring, we're mentioning inside 5 or SPY. You can go in the trade review. Drea did trade this one. If you go to the 5 minute, then you'll see this. The inside bar goes 2, 1, 2 reversal. So our question is, what would that change? Well, the daily opens here. So it would change the day from red to green and cause anyone short to get out. Then we also want to ask ourselves, what does that mean for continuity? So if we look at the day, you'll see it flip to green here at 533.66 after taking yesterday's low. So what is that on the day? It's a potential 2 going 3 above that. If we go to the week, you have this 2-2 to the upside. So it's green, got continuity on the week. On the month is also green. So we had full time frame continuity after that day went green, caused by the inside bar 5er group coming in and buying here. And then what we can ask ourselves is, what does that set up? Because if the first 15 minutes traded aggressively down and then all the way up right to where it opened, what is the 15 minute going to look like? It's going to look like a hammer actionable signal for a 2-2 reversal. Where would the magnitude of that be? The magnitude would be to take this out. The 2 down, 2 up reversal, targeting compound 3 to that. And then it does. What also happens in here is after the first 2 15 minutes close, the 30-minute group also creates a hammer. So we have additional signals, 2-2-30, same exact target. And then after that occurs, the 60 group becomes a 3. What is this setting up? The 3-2 continuation right here. And you'll notice, if we go and mark it out, 534.76. When we say it should go instantly, this is what we mean. It pokes up and gone instantly. I'm not sure if there was a slight poke up and then red and then back up, but they did it once, came back down, and then triggered again and then went at worst. So if you have a really tight stop, which is risking on the SPY since the spreads are like a penny, you'd be risking a couple cents here. Maybe you stop out a couple cents and then you get back in a couple cents again and then it goes. So the 3-2 on the 60, explosion. Boom, goes 3 on the day. And what we mentioned at high a day, for those that did take this in the morning, was the 2-2-1er here to get out. Because what we'll notice is the intraday guys, 2 or 3-1-2-1er, 2-2-2-2-2-2-2-2, 1-2-2-2-1, 2-2-2-2, 2-2 reversal. And I don't expect you guys to like see this and be like, oh, I get it, I can go do this now. But I'm just showing you guys where we can see the patterns and how that plays out. So we had the 2 going 3 day, the 15, the 30, the 5, the 60, all of those groups reconfirmed it. And then once it became a 3, that was the only thing it could do, is become a 3. So after it's a 3, we don't know. And looking into the afternoon session, what you'll see is the 1, 2 up continuation. Why do we not play continuation? Because you're hoping for aggressive buying to continue. It's already an outside day, so we don't even know if it should continue. And then you get the 2 up, 2 down reversal. We can do that. So you have the 1-2-2 Rev Strat 60, and the magnitude was what? Right here. 533.95. They take it out. And then you'll see what triggered that to occur. The 2-1-2 reversal on the 30. Right here. Boom. Takes them all out. Where you can see the 30 and 60 groups trade against the daily group. It's conflict, but it is pivot machine gun as well. You have 1, 2, 3, 4, 5 higher lows, and then they take it out here. So hopefully you guys can see that. Yeah. I can do that for you guys. We'll do it here. The only thing is after the time frames are already closed, it's a little harder to visualize what is going on. But if we go to the 5, the 15, 30, 60, you can see how that plays out in the morning. So the 5er inside bar creates the hammer 15er, which goes 2-2, which creates the 3-2-2-30, which is something we look for. It's a hammer as well, which creates the 3 on the 60, which goes 3-2, which is also something we look for. And then you go outside on the day, taking out yesterday's lows and highs. And then the other thing we can do, and it was mentioned during the stream, you can short it off the highs. You can take all their money on the way up, and then right when they're going 5ers and 15ers down up in the highs, you can play it short. They went 2-2-15, hit the magnitude, and then did not continue. They went inside in green here, and you just had to reduce your size or get out of any attempt short. And the other thing relevant to today's price action that I haven't mentioned is jobs numbers. So when there's news, a lot of people want to sit there and not do anything because it's news and they're scared. But if you know where the reversal is going and what the continuity is, you can trade it. So jobs numbers came out in the morning, and for the futures traders, what we'll see is this. Wait. I might be able to do it on Thinkorswim. We'll do it here. Looks nicer. Watermark. Yeah, so you can see gold in here today. They had the continuation down. Didn't like that. Why? It's a continuation, right? Although you did have continuity, so you could have tried it, just didn't work after low day. And then the 2 up, two down reversal here after the corrective 60 and then killed. And it has a shooter month, so this is something we'll look for next week. But if we go to the futures, what you'll see on the futures is when the news comes out, you're always going to get a nice big 3 for the most part. Rarely do you not. So in the morning, that 3 is a broadening formation to all this price action on the left. This is outside of all of that. So what you'll see for the futures guys is the 3-2-2-15er here. What's that trying to do? Up there. It did triangle out. This is New York Open where they stopped them out. And then here's your hammer 15er. It's a 3-2 and a hammer. And then boom, up into the highs. Then you can see the 2-2 where they tried to get it back down there, but the sellers were not strong enough to do so. And then in the afternoon, they poke up into the top of it. And then you'll see again the 3-1-2-2 from high day, and then the 2-1-2 continuation. So for the futures guys, really pretty. You'll see the Dow Jones, they went 3-1-2 and then took out the high and then caused that short covering. If we go to NASDAQ, NASDAQ was a little weaker this morning, but they still did it. And you can see on the weaker stuff, they triangle out and they stop some guys out on the way up in this. And the reason that occurs is because notice NASDAQ did not take low day here. So the fact they didn't take low day tells us, well, this is all inside. So when you're inside the previous range, the price action, you're going to get a lot more triangle outs if it's still going to go and take the other side of that out, which it did. But you can see they stop them out, and then they go up, and they're stopping them out the whole way up. Whereas ES, with the 3-2-2, there's one stop them out, and then they go and get after it. And YM, similarly, they have one big stop them out, and then the signal. Because it's failing the lows of the 3, it's not just inside of it. You took the sell on the 30-60? Nice. I just want to hear you guys. Are you guys seeing it? I know we haven't gotten to everything yet, but hopefully you guys are seeing it. Because once you see it, you don't not see it. Yeah. And I know we're looking at multiple time frames. We haven't talked quite about how we do that yet, but that will be coming up next. Let me actually check in the course what is next up. Yeah, so next up, we're going to talk about corrective activity versus reversal a little more in depth. And then we'll talk stop losses, exhaustion risk, exhaustion reversals, confirming and negating plus scanning, how we do that. Then we're going to cover the broadening formations, how we draw those and how that works. And then we'll get into, there's a lot more that we, then we're going to get into simultaneous breaks, which are super cool. And then there's a few different little tools that we have to help people see things and chart things correctly when they're learning, as well as multiple time frame analysis, and then all the trading universes that we have. So we still got a lot to go. Will we go over how to find a PMG? You can scan for it. That's the great thing. Every strat setup, since it's quantifiable and we know it to be true for certain, or at least we know exactly what we're looking for, you can scan for everything. So if we go to stratalerts.com, once we get to the scanning section, we're going to have everyone using this, and hopefully it's working out well once we get there. But you can scan here, and you can actually scan for how many PMGs you want. So you can scan for 5 here on the daily. All of these will have a PMG of 5 or higher. So if you go to like Boeing, you're going to see on the daily is here's your PMG. 1, 2, 3, 4, 5. Also has 6 down here. Isn't that neat? So once you know what you're looking for, and the whole point of this course is we want everyone to know what they're doing, because the strat is not like follow. Rob would always say it's not follow the leader. What the strat is like you want to know what you're doing. You have a simple postcard that says like, okay, I'm going to trade the 30-60 breaks on gappers or something, and then you're just doing that. So once we get there, You guys will know how to do it all. And we do not have any other scheduled content for today. So today could run a little short unless you guys have other things you want to chat about. I don't want to get way too much into the next parts of the content. So I'm going to try to refrain from that. Yeah, so the Strat scanner, we'll be covering that in one whole night. If we need more than an hour or an hour and a half, I'm willing to sit there for 3 hours if you guys need that much help. So don't worry about that. The definition of the terms. I don't know if we have it there. I mean, as far as so the ones that most people get confused on is current candle, CC. That's current candle. So if we're scanning monthly bars right now, we want to scan and see who's going up this month, two to the upside. Boom. Here's all your uptrends. And here it is. So this is current candle two up. You got 129 uptrends this month. You can also go two down. You got 143 two downs, which is why the market isn't really going anywhere. It's up, but half the market's going down right now. And then PMG, we already went over. Potential three, this doesn't work, so we're not going to talk about that. And then this stuff should be pretty self-explanatory. T1 and T2 are the first target, and then an additional target on top of that. So like where the next pivot is. And then C1, C2, CC, it's current candle. And then this is, I think these should be switched, honestly. I know I can see how that can be confusing. But what it's saying is that we had two down, one, and then two down. So this is the candle from 3 bars ago. This is the candle from 2 bars ago. And this is the current candle. Or actually, it'd be 1 bar ago and then 2 bars ago. Hopefully that makes sense. Light screen? Yeah, I apologize. Let me fix that. Oh, Tom has a video. Awesome. An example of yesterday's homework. Yeah, we can. Totally. So yesterday's homework was, can we identify any 2-2 or 1-2 pattern paired with continuity, or where the participants create continuity by changing the continuity of other time frames? And I said SPY had a few, Biotechs and Staples had a few. Mark the triggers of magnitude. So any reversal pattern, 2-2 or 1-2, and it doesn't have to be, it can be continuation too, with continuity or that creates a period of full time from continuity. So SPY, for example, this 30-minute right here, it's a hammer 2-2 reversal. So that is a 2-2 signal, and it's a 2-2 pattern, right? What does that do? Well, the daily open is here, right there, and then the week and month opens are below the current price traded. So when that goes, it creates a period of full time from continuity. So that would be the second one. The 2-2 creates full time from continuity, using the 30 participant to do that. An example of buying into continuity was the Biotechs, and this was something we did on Wednesday. So the Biotechs closed as a 2-1 on the daily. At that point, the week and the month were green, so it was going up. When this breaks above this, 92, let me make sure we're correct. 90, what? Oh, there it is. Okay, so 92.30. When it breaks above that, that is a signal in force. It's a 2-1-2, and it has full time from continuity. So that'd be the other example. Staples also had something like that, where you're going to see, just didn't go quite as hard, but goes 2-1-2 here. And then today it reversed that. And I believe that occurred way later in the day. Yeah, so and grinded down all day and didn't do too much. Hopefully that answers your question. And when you're talking about charts, you want to talk like we talk. So you don't want to go in there and be like, well, this was a maybe, kind of, sort of. You want to know exactly what you're looking at. So that's why we have the homework and we want you guys doing it, because if you can say this is a 212, it's in a period of full time from continuity, and you can identify that, you're already halfway there. Do you mean by fail that it pokes up again and then goes three, or do you mean by fail that it goes hammer and then inside bar? And sorry. So his question was, I noticed when a hammer takes its own high right before it closes, or vice versa for a shooter, it seems more likely to fail. Is that because of the broadening formation? And my question is, do you mean by failure like a two that triggers the hammer and then fails, or by going inside and then just not triggering? Pokes up and becomes a three. Do you have an example of that off the top of your head? I'd love to look at it. But is it because of the broadening formation? We can say yes. And the reason that is because what a hammer is if we go and look at this on a lower time frame, not every single one's going to have a three like this, but there's a three here. So it is a broadening formation on the 60 basis. But when we're playing the break of any bar, the reason we want to tight stop it is because of that occurrence, because we know twos can fail. So if you're talking about is it a broadening formation, that's why it fails. Yes, every range can be failed at one side or the other. What we're identifying with our scenarios and actionable signals is ranges that are more likely to actually get going. So when we see a hammer weak, that's more likely to get going than it is to come back in. Whereas if it's just a two up continuation week like this, that's more likely not to keep going unless the higher time frame has signals and stuff in force, which we'll get to. So we're identifying the range and we're identifying what did that group just do, and then is that more likely to get going on the next candle or not? And our signals tell us of those trapped guys. So yeah, I guess for example, this one, I don't know, it's kind of a hammer. Let's see, this shooter here. It's like this shooter forms, and then we can drop even lower time frames here and see when that forms, what's happening. So this is the shooter. Formed here, opened, and you can see it goes instantly, then it comes back in. So when this happens, we go break even, and then once it's back in, we just break even, stop, didn't work. And in this case, we actually would not even be taking this. This is a bad setup. Given your higher time from continuity at that point, it's to the upside. And you're a mother bar on the 60. But I don't know if I can search through here and find an example of one that failed and see. Yeah, I guess if you find me an example and you want to share it, we can go over to a different stream whenever you got it. Let's do it. More often than not, so there's two types of failures. There's a failure because your analysis was wrong. Like you're buying, let's say it's bright red on the month and you're trying to buy a hammer day. Probably not the best thing to do unless you have a bright green week at that point, or it's on a Monday, or there's other things that we'll talk about in the future. Or the second reason something can fail is an unknown participant, where we don't know why it failed. Like we can look at something like, for example, you know, NVAX. We had this rev strat here on NVAX, and we were looking to add, right? So this hammer happens, and then it doesn't work. So when that occurred, we said, wow, there's an unknown participant selling here. We don't know who that is or how much they have to sell. We have no clue. That should have worked because it was a rev strat with full time from continuity. So when that occurs and fails, then that's our hint to like, hey, like we probably want to take some profit. And then you can see, boom, The seller comes in and they sell. So even failed patterns do give us more information. You bought it at $4. Nice. And you can see on NVAX, this is a pretty one. The 3122 on the month. Gone. Crazy. But I hope that answers your question, or at least the different thoughts you might be having about that. We got about 9 more minutes. So if there's nothing else to cover, then we might be ending early. And your homework tonight is just going to be looking for 3-2s. And you can look for 3-2s, 3-2-2s, doesn't matter. As long as there's a 3 involved. Because you want to get very used to understanding how that broadening formation plays out. And since it's Friday night, you don't have to do it until Sunday night or Monday during the day. So don't feel obligated. It's not that serious. Is there class Monday? No. Mondays we are off. Do we always trade in the direction of continuity? So the short answer is no. Because we know that control is determined by the day in 60, if we're a day trader, all we need is the 60 at least. So we can really get in there and, like, when things are moving, jam up and down and kill it both ways. But most or a lot of people will just trade continuity to the upside or downside, because that when you have that condition, we know for certain, like, the buyer's more aggressive and you can be confident in that. Whereas, like, for example, we had the energy trade Tuesday night setting up on the daily. You'll see they had the hammer day. You're like, okay, well, maybe the energies come back up with the Wednesday energy numbers. They triggered and they did nothing. And at that point, the week and the month were bright red. So they tried, but they just weren't aggressive. And you get a lot more failures like this when you're trading against continuity, simply because it's bright red, right? Like, they have to counter a lot of continuity to do that. Questions? Oh, any? Oh, she meant to say on. The schedule for the rest of boot camp. Since this is the first time we've done it, we actually don't know how long it will take. And I can show you guys this here. The next sections, they're not quite like, you can see very lengthy sections here, because we're talking a lot about, like, what are we looking for and why we're looking for that type of stuff, with tons of examples just to get you guys to see it. And then once you understand this first part, which you've already pretty much gone through, the rest is the nitty gritty of stop losses, execution, and then making your trade plan, like how you're actually going to go and execute this stuff. So you can see a lot of more shorter things. Like, all of this stuff is going to be covered in one day. So hopefully by Friday next week, we've completed all of this, and then we can get to the trading aspect. And I imagine, I mean, just looking at it, I think we can probably do it before Thursday next week and give you an extra day. You will have access for forever. All of the content that we're sharing here, you should be able to download, or you'll have access to the links. And that's, I mean, you guys paid for it. You get it. No reason you shouldn't. The only thing, and we did have, I don't know if you had a question about this on the first day, But as far as the course is concerned, we are going to be reformatting it and kind of going through and refining a lot of it, especially once we have the feedback of you guys. So there, like in future versions of the course, it will be the same content, maybe organized very slightly differently with a different look and feel to it. If that makes sense. But you guys get it all. And since you're the first group, you probably get more because we're going to be a lot more on top of all your questions and making sure that's cleared. Great, great, great. Good. And if we're paying for premium, you'll have access to the next boot camps. No, the way this works, and the reason we did it the way we did is because we want the stat Discord to be full of people who have a great understanding of the strat. Because ideally, at the end of this course, you'll know exactly what you're doing. You'll have your own trade plan, and you'll be able to do it and execute on it. So once that's the case, then we really supercharge our trading because you guys are the first group. Sorry, I'm getting distracted by the chat. But since you guys are the first group, we will hopefully have all of you guys doing whatever you want to be doing. If you're a scalper, a longer term guy, whatever it is. But if we have 100 people with two screens or one screen, like we have an extra 100 screens, so we can look at a lot more market and catch a lot more trades as a group. And Rob always said trading was a two-person job. You have one person kind of doing the analysis. You shake hands with your guy executing. And you're like, yep, this is what our analysis is and what it looks like, which is why the strat's great because we know what we're looking for. And then you can say, like, during the day, like in the morning, how do we know the SPY fiver? Well, as the fiver is cooking and forming inside bar, I'm like, hey, SPY inside fiver, Dow Jones hammer, IWM setting up a potential 2-2 fiver, and Q's something something. I think it was also inside. I'm not sure. And then I said, I believe SPY had a relative strength, or Dow Jones had relative strength. It was one of the two. And when I say that, you know exactly what you're supposed to do. Because you know, okay, inside bar, I know how to do that, and boom, hit it. So if we can have 100 of you guys also helping to scan the market, then every 60 minutes we get new 60 signals. You can kill it. The live examples. Most of the stuff we're talking about here today is stuff from previous live streams. That's why we have the dates on there. Because like Marvel, if you go back to, like, just for example, and this will be the last thing we do here, but I can pull up the stream from that day for you. And it was the previous Marvel kicker, not that most recent one. Yeah, so March 7th. What month number is March? January, February. I always struggle with that. Is it number 3? Thank you. Sorry. You know, it's really funny. I went to private school and they just never taught us the dates and the numbers and all that stuff. I only learned them in Spanish, to be completely honest with you guys. I know them all in order and everything. I just, the numbers doesn't work. I believe 307. Oh, it should be. Well, I guess we're going to have to go back. 307. Unless there is a time where these are cleared out. All right, you'll see here Chips Marvel. And I bet pre-market, we're hyping it up. If we can go and find it in here. Or wait, no, this is not 307. Was it? It might have been 308. because that daily chart in Marvel is not correct. This was when the chips are all just flying into the highs, so that's why they're on the list. But okay, went too far. 308. There it is. Yeah, so you'll see Marvel on here was the kicker. And right here. And I know the audio is going to be kind of messy on my desktop. I apologize. Let me turn on subtitles since we're having problems with here. Costco is simultaneously a kicker with Marvel on that same day. So there's your green to red move Marvel, and that's our initial short entry right there. And then we mentioned break even. And this one actually does stop us out and then re-trigger. So we'll see that as well. See if I can get into it. And the other thing I want you to see is when we're on the stream, we're monitoring a lot of things, which is why it's super, super important that you guys get to the end of this boot camp and have a trade plan, because you're not gonna be able to trade it. You're not gonna be able to trade everything single thing. But if you know, like I'm a kicker guy in the gappers, then you know to focus in on cost and Marvel right here. There's also CNC, which is not a ticker I normally trade. But I'm not sure if there was. I might have been thinking wrong on Marvel about the stop out and retrigger. We'll see. I think this is where it stops out and then re-triggers. I'm gonna get to Marvel here. Yeah, here it is. We should bring this back up. Yeah, so here it is. Yeah. This is when we were doing that big old energy trade off the lows. And we'll see in here. I believe some Marvel sets up at 15. It might be later in the day. Let me go to the charts so we can skip through the stream and get to it. Yeah, so it's a 30 here. So I'm going to have to go and skip through that into the stream. But let's see Marvel, they take it down. In the morning, they did take that fiver and try and hammer it, but they didn't reverse it, which was mentioned. And we are like, okay, it didn't reverse the fiver, so they're not recovering. And then you get a sideways 60 in here, where these two 30s go inside of that. So that occurred at what, 10 o'clock. So we're going to have to go and find that timestamp. So Tesla trades, SMH. Here. Yeah, so it looks like I didn't pull up the chart, but I did take this one. So I recall saying the sideways 60 during the day. A lot of people are listening, not watching. So I have four screens. I'm speaking everything out while I'm tabbing through charts on the front screen. So I don't know if we'll be able to find the exact moment we mention it here. Normally it's about 10 minutes before the flip. But hopefully you get the point. It's on the list and we're looking for the kicker. I don't know if we'll be able to find the exact mention of that sideways 60 or not. I'd have to sit here and scroll through. Best pattern of the strat, the broadening formation. And it's not a pattern though. It's a phenomenon. It just happens. Because the thing with patterns is like people will say like the 212 is a pattern because you can define that as a 212, and we see that occur in the charts. The broadening formation is more of a concept where if you fail one side, you take the other. So we'd say it's a phenomenon, not a pattern. A three pattern cat's tattoo on my hand. um, the Chicago is, I think the Chicago is like within the strat groups. The 312 see a buy is that's the most I guess talked about one. If you're going for a chest tattoo, it should be the PMG for sure. I thought I was gonna loathe the charts, but I've geeked out on them. Yeah, when I when I first found the strat, wow, I'd sit at the charts for 4 hours straight, just going through every chart. I'd be like, what the, like, this stuff is nuts. I'm Audi. Okay. Have a nice one. Yeah, it's 7:40. I can check my phone out. Addictive for a logical mind? Absolutely. It gets really fun when you try to explain it to someone who's never seen a chart before. Like super fun. Got your Audi, LO. Yeah, my Audi is, I think it's paid off after this month. Yippee ki yay! Technically, it was paid off before, but why paid off? I think I had a 1.3% interest rate. Like, why would I pay that off when inflation's like 3% a month or whatever it is? It's crazy. They're 7%. No, no, no. It's 1 point something. 7? Ouch. Yeah. 212 is New York. Oh, that's pretty cool. The good old days of low interest free money. Yeah. Looking back, I wish I had bought the house, but there will be another chance. I'll get my shot. Yeah. I guess the crazy part is I could have. I didn't. But I mean that's all we got tonight, so if you guys want to continue chatting, you can. I'm gonna be heading off. Spy and Qs and execute, yeah. The only thing with the spy and Qs is you gotta let them pull off the highs. Because when they're going into those all-time highs, it grinds. Like today, what a mess. After, and that's why it's a phenomenon and it's something we have to look for, the broadening formation, because when they take this low out and fail, we can look to target the high, and after that, we don't know if the buyers are coming back, and you can see us grind, 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 and then nothing. But that's going to be it today, guys. And as I had already covered, next week is when we really get into the execution and how that's going to work, as well as a few other things like scanning and different setups like simultaneous breaks, just small additional things. So, really excited for next week. Can't wait to get there. I hope you guys have a great rest of your weekend, and I'll see you guys next week, Tuesday night, for the boot camp.